It was finally launched in 98, 99, and in different stages, basically, but a decade ago. Europe was still on this sort of relentless path towards ever closer integration. We had a series of treaties, and then we had the European Constitution, which was rejected by the French and Dutch people. And that was supposed to be the kind of the legal mechanism that would make all this possible. And now they've had a second go at this. They call it the Lisbon Treaty, and it's just been rejected by the Irish people in a referendum, the only country to have had a referendum. In a way, they were a proxy vote for the rest of us who were not given a vote. And they've got a crisis on their hands again. They cannot get popular support from Europe's peoples for such an initiative. Because the truth of the matter is, these are ancient nations, nation-states, with their own institutions, with their own languages, with their own completely separate sets of institutions and loyalties. You cannot create the United States of Europe, anything like the U.S., out of that material. What's the common language? What's the sort of common purpose? There's no unified legal system. The way we look at the world is so completely different. It stretches this project beyond the point at which it can go naturally into an unnatural area. And that's what they've tried to do. And I think they've jumped ahead of themselves with the euro. And I think what's going to happen is they will never get the institutions to back it up. Instead, it'll just be an orphan currency in limbo, limping from crisis to crisis. And eventually, I suspect that some of the peripheral countries will be forced out, either opt to leave or be forced out. And then there may ultimately be a kind of core euro of a much smaller group of countries that have got a single kind of compatible economic area. That may happen.
So, Ambrose, one last question, just to leave our listeners with practical considerations. If the long-term credit-driven boom, which we've seen globally, benefit Europe, benefit the United States, which to a certain degree has become a credit bust here in the United States, and you would argue is likely to become a credit bust here within even the next 2 days in Europe, what are practical steps that you think investors should be taking if that is in fact the direction that we go, more of a global credit bust, assuming that the central bankers can't get in front of this and turn the ship around quick enough?
Well, be careful here, because I wouldn't want to say, I wouldn't want to predict what the stock market is going to do, this week, next week, or I just see building up something. It feels to me a bit like the stresses in the credit market we saw last summer before it all went to pieces in August. You could feel it already happening in June and July. And right. I just feel it again. We've got another round of another storm coming, and that's my concern. And there could be another leg down in this whole crisis. I'm not allowed, actually, under British FSA rules, to give any investment advice. So I have to be a bit careful. All I can say is people betting on, thinking that stocks have fallen, 15%, 20%, whatever it is, and therefore now look cheap. Just be careful. If this turns into the kind of serious bear market that I fear, then they could get a lot cheaper. I think as they say, wealth preservation in these circumstances is the name of the game, and cash is king. Some people like gold, and some people like alternative kind of precious metals, essentially, and alternative investments like that. I've been a gold bug for a long time because I thought that the central banks had kind of blown it a few years ago.
Well, thank you for joining us, Ambrose. You've been listening to the McAlvany Weekly Commentary. I'm Kevin Orrick, and this is David McAlvany, along with Ambrose Evans-Pritchard. Ambrose, we have enjoyed your articles and continue to read them on a regular basis from the Telegraph, and we thank you that you joined us today.
Well, it was a great pleasure to be with you, and I hope I'm wrong.
We do too. Don and David McAlvany just finished with this year's video called When Greed Turns to Fear, which is an in-depth analysis of the current situation economically and politically. You can call us at 800-525-9556 to reserve your free DVD. It should be out in the next several weeks. In the meantime, you can actually see the complete presentation on your computer right now. Just go to youtube.com. Many of you know what that is. It's youtube.com, and type in the search bar Don McAlvany, spelled D-O-N space McAlvany. You'll get to see the whole presentation in 10-minute segments on your computer right now until we can send you the DVD. So call us at 800-525-9556, and in the meantime, check it out on YouTube. And once again, you've been listening to the McAlvany Weekly Commentary. I'm Kevin Orrick, along with David McAlvany, and our guest today, Ambrose Evans-Pritchard. Thanks for joining us.
This has been the McAlvany Weekly Commentary. The views expressed should not be considered to be a solicitation or a recommendation for your investment portfolio. You should consult a professional financial advisor to assess your suitability for risk and investment. Join us again next week for a new edition of the McAlvany Weekly Commentary.